Hi, Lara from forexinfo.us with your free daily analysis of the US dollar index from an Elliott Wave perspective on the 24th of February. If you would like Elliott Wave analysis to help you in trading of the euro dollar and or the pound dollar, you can try my packages out for just $1 for the first week. Go to www.forexinfo.us, click on the big fat green subscribe button and check it out. Starting today's analysis with a look at the really big picture. This is a chart that goes back to 1972 of the US dollar index. So having a look at movement just since 1984-85, or beginning of 85, we had a 5-wave down movement, 1, 2, 3, 4, 5, followed by a 3 waves up for A and a 3 waves down for B at cycle degree. Now this section here, I'll just move this down again so you can see the dates. This section here, from this point labelled 5 down here, towards the end of 92 to just the beginning of 2002, this cycle degree wave took pretty much 10 years. That's how long they take. This one here took a little bit less, 7 or 8 years. So I am expecting that the next 1, 2, 3, 4, 5 up for wave C at aqua or cycle degree should take at least 5 or 6 years and could take up to 10 years or so. So that's going to take a while. So we have some long sustained dollar rises with corrections on the downside in between, but eventually we're going to see dollar rises comfortably above 122. And that's entirely possible. It's been well higher than that before. We just don't remember at this stage. So I'm going to take you now to the usual daily chart just for the last 3 months, and this chart here ends in December 2009, so it's not showing the last little piece of upwards movement, and we'll see that on this next daily chart, and here it is. So this is the end, right at the end down here of that long term chart back to 1972 I just showed you, and here's this recent upwards movement that's going to eventually in coming years take the dollar very much higher, well above 122. We've got our first and second leg complete, and we're working on the third leg of wave 1 of intermediate degree. When that's finished, we'll have 2, then 3, 4 and 5 of intermediate to complete our third wave up. So far, we've got 5 waves up within this third wave and a second wave down, a short little zigzag, and it looks like in the last week or so we've actually been tracing out a complicated combination correction. I'll show you that a little bit more clearly on an expanded hourly chart, but before we go there, the target for wave 3 blue remains the same, upwards about 83.5, and the invalidation point, this wave count at the daily level and the hourly at the moment, will be invalidated by movement below 78.44, which we certainly don't expect at this stage. So taking you now to the hourly, where this green one is analogous with this green one, and here's our recent sideways movement, which I'm now thinking looks more like an expanded flat, followed by a zigzag for an X, followed by what may be a simple zigzag if it ends up down here, and that will make it end sooner, or we could possibly be seeing an A, B, C, D, E triangle. So it's either a zigzag or a triangle. It depends on what happens in the next 24 hours. If it breaks down through this line and comes below this point A here, if we have a new low just below here, then we'll be seeing a simple zigzag, and that will be the end of the correction. After that, either way, if it's a zigzag or a triangle, when the sideways movement is over, we should have as a resumption and strong upwards movement of the dollar. Either way, just taking you back to the daily, either way it should be well contained within these trend lines and should end up well below here. We can draw another trend line down here, probably to contain the last of this corrective movement. Now, I don't think it is a triangle because we don't have confirmation with MACD. This is an unusual use of MACD, I know, but it's a good way to use it for Elliott Wave. If this was a triangle, here's our X with a possible A, B, C, D, E triangle. So the triangle starts here. Here's a corresponding point on MACD. We don't see MACD hovering around 0. Triangles are indicative of low volume, sideways, nearly equality and stability. and a sideways trending movement. And that's evidenced by MACD hovering around 0. So this is not confirming a triangle, which is why I'm thinking and why I've labelled this structure as a simple A, B and a C to end just below this point here, 80.10. So we need a new low just below here, 80.1, and that should be the end of the combination. So after that, we should have resumption of very strong upwards movement for the dollar. My overall trend is still very strongly, very clearly up. So a very clear invalidation point, clearly still the same target, and a pretty clear idea of the direction for the next 24 hours with the dollar. I hope this is useful in your trading. As always, may all your trades be profitable and have an awesome day.